Hi students, good morning. I am Dr. Majini Jaspalla, Assistant Professor. In this class, we are going to learn about installment system, Unit 10, Block 3. First, we can see the introduction of installment system. Under this system, the purchaser pays the cost of purchased assets in number of installments. However, in this system, the ownership of the goods is transferred by owner on the date of delivery of the goods. In installment system, the ownership of the goods is passed immediately to the buyer on the signing the agreement. The accounting entries under installment payment system are similar to those posted under the hire purchase system. Then we can see the concept of installment purchase system. An installment system is just like a credit purchase and a hire purchase system of selling and buying goods. Like hire purchase, in installment system, an agreement is made between the buyer and the seller to purchase and sell the goods. The buyer makes a certain down payment at the time of signing agreement, and the balance payment is paying in installment over a period of time. An installment system is a credit sale in which payments are made in installment over a period of time. In this system, the buyer gets the possession as well as the ownership of the goods at right time at the time of signing of agreement. Then we can see the meaning of installment system. The installment system is almost similar to the hire purchase system. The main difference between the installment system and the hire purchase system is that in the buyer gets the ownership rights as soon as the contract is signed with the seller. If he makes any of any installment, the seller can repossess the article only with the help of the court. Hire purchase and installment systems facilitate the brisk sale of consumer durables, commodities like two-wheelers, televisions, and radios, furnitures. These are the items they can sold in large volume under this hire purchase and installment system. Normally, we can see everywhere in this hire purchase and installment system. Most of the business people also using this installment system method. Then only they can sell more product. When they are selling the more product, they can earn more profit. Okay. Then we can see the method of computing installment under hire purchase. Under hire purchase, interest is usually charged on a flat rate for the period of hire. We can calculate the amount of installment by adding the amount of principal, that is the cost of the asset, and the total interest for the period, and further by dividing the total amount of payment to be made by the number of installment. Normally, we can see the cost of the product is 50,000. Now they will calculate the interest also for the particular period of time. And after calculating the interest, they will add that interest with the original principal amount. After that, only they will divide that amount in equal installment. Based on that, they are collecting the installment amount in this installment system. Here, I have given one of the example for your understanding. An equipment costing rupees 1 lakh is sold on hire purchase on the terms that interest will be charged at 15% per annum on flat rate basis, and the payment is to be made in 5 equal year-end installments. In this above example, the total interest burden shall be 75,000. That is, the cost of the equipment is 1 lakh, right? If the cost of the equipment is 1 lakh, now the interest rate they are charging 15% interest per annum. 15% means already the amount is here 1 lakh, right? The cost of the equipment is 1 lakh. Now they are adding 15% interest. So 1 lakh into 15 by 100, right? Into 5. How much is the amount? Total amount is 1,75,000. We are dividing that total 1,75,000 by 5. Okay. So we can get the amount 35,000. 35,000 is the installment amount. Okay. Yearly installment. Okay. Next, we can move for the illustration. For your easily understanding, I have given one small example here. Just I wanted to read that question. Listen carefully. X Transport Limited purchased from Delhi Motors 3 tempos costing 50,000 each on the hire purchase system on 1/1/2011. Payment was to be made rupees 30,000 down and the remainder in 3 equal annual installments payable on 31/12/2011, 31/12/2012, and 31/12/2013, together with interest at the rate of 9%. X Transport Limited write off depreciation at the rate of 20% on the diminishing balance. If paid the installment due at the end of the first year, that is 31/12/2011, but they could not pay the next on 31/12/2012. Delhi Motors agreed to leave one tempo with the purchaser on 1/1/2013, adjusting the value of the other 2 tempos against the due amount on 31/12/2012. The tempos were valued on the basis of 30% depreciation annually. Show the necessary accounts in the books of X Transport Limited for the years 2011, 2012, and 2013. Now you come to the solution part. We can see X Transport Limited Tempo account. X Transport Limited Tempo account. In the debit side, you should put 3 columns: date column, particulars column, then amount column. In the credit side also, we should put 3 columns: date column, particulars column, then amount column. First, we can see 2011 January 1st. Okay, 3 years are there: 2011, 2012, and 2013. In the year 2011, on January 1, 2 Delhi Motors. In the debit side, we should write it 2 Delhi Motors. Why? Because of, see here in this question, X Transport Limited purchased from Delhi Motors. They are purchasing the motor tempos from this Delhi Motors, right? 3 tempos. Each tempo's costing is 50,000. So 50,000 into 3, 1,50,000. That amount we have to write it in the amount column. 50,000 is the cost of one tempo. 3 tempos they bought. So 50,000 into 3. That is 1,50,000. Next, you come to this credit side. Depreciation they are charging, right? 20% of the depreciation. Okay. So we can calculate the 20% of depreciation. Which amount we should calculate the depreciation from this total amount? How much? Total amount is how much? 1,50,000. Okay. So 1,50,000 into 20 by 100. How much is the amount? 30,000. So we can write here by depreciation. By depreciation in the amount column, you should write 30,000. Okay. And the debit side total is higher than the credit side total, right? 1,50,000, 1,50,000 debit side total. The depreciation amount is 30,000. From this 1,50,000, we should subtract that 30,000. You will get the balance 1,20,000. So you can write here by balance CD. By balance CD. How much is the balance are there? 1,20,000, right? This year was closed, right? This year we have closed this year 2011. Now we can move for the next year. This amount, this balance amount, we should brought on for the next year opening, right? So we can write here 2012 January 1. Why? Because the accounting year is 1st January to 31st December, right? They have given in the question. So we can write here 2012 January 1. You should write here to balance BD. To balance BD. The same amount we are going to brought down here. 1,20,000. You can write here 1,20,000. Every year end we will calculate the depreciation, right? So you can write here 2012 December 31. In the credit side, you can write 2012 December 31. First, we can write the depreciation. So you can write here by depreciation. By depreciation. How can we calculate the depreciation? This is the diminishing balance method, right? This is not a straight line method. This is diminishing balance method because they have given in the question. So this is a diminishing balance, right? 1,20,000 after subtracting the depreciation. Last year, depreciation 30,000, the balance amount 1,20,000. From this 1,20,000, we should calculate the depreciation. So you can write here by depreciation, 1,20,000 into 20 by 100. 1,20,000 into 20 by 100. You will get 24,000. So that we can write here by depreciation 24,000. Then one of the important points they have given in the question, due to this lack of payment, they are not ready to pay the amount, so that the company is ready to leave one tempos here and they are going to take 2 tempos with them. So for that, we should calculate whether it is profit or loss and how much is the value of that 2 tempos they are going to taken away. Okay, so just to come here, first we should calculate the value of the tempos which was the company was taken. Here I have given some of the notes. Value of tempos taken away by the seller. The heading I have given here, value of tempos taken away by the seller. How many number of tempos they are going to take? There are 2 tempos. So we can write here 2 tempos. Cost, original cost of the tempos is 50,000, right? So 50,000 into 2. For the 2 tempos value is 1 lakh. Because each tempo cost is rupees 50,000. So 2 tempos 50,000 into 2, that is 1 lakh. The next line we should calculate the depreciation. We should calculate the depreciation for the 2 years. They have given in the question, when they are taking the tempos, they are calculating the depreciation 30%. See this sentence, the tempos were valued on the basis of 30% depreciation annually. So we should calculate depreciation 30%. Okay. This is the diminishing balance method. So you keep in your mind, this is the diminishing balance method. Okay. For the first year, we should calculate 1 lakh into 30 by 100. 1 lakh into 30 by 100. See here, that is 30,000. Okay. For the next year also, we should calculate the depreciation. Okay. For the second year, how much? Second year also, again, we should calculate the 30% depreciation, right? Already the amount is 1 lakh. 1 lakh minus 30,000. Listen carefully. The value is 1 lakh. But last year depreciation we have calculated 30,000. How much is the balance amount? 70,000, isn't it? So balance amount is 70,000. From that 70,000, again we should calculate 30% depreciation for the second year. So you can write here 70,000 into 30 by 100. How much? 21,000, right? For the first year, 30,000. For the second year, 21,000. See how much is the total depreciation? 51,000 for the 2 years. So the value of the tempo is how much? 49,000. Okay. So just to bring this amount, you should write it here by Delhi Motors account. By Delhi Motors account. For your understanding, you should write in the bracket value of 2 tempos taken away. Value of 2 tempos taken away. How much is the cost? 49,000. Okay. 49,000. You can write it in the amount column. Then we should calculate whether it is profit or loss. Okay, we should calculate whether it is profit or loss. Okay, total amount how much? The value of the asset is 1 lakh, right? For the 2 machines, 2 tempos values is 1 lakh. All the 3 tempos value is 1,50,000. Here we should calculate for all the 3 tempos values. Okay. 3 tempos value is 1,50,000. How much is the opening balance here? 1,20,000, right? 1,20,000 is here. So now we should calculate depreciation for 20% from this amount. Already we have calculated. How much is the amount? 24,000 is the depreciation, right? So 1,20,000 minus 24,000. Can you understand? To find out the profit, we should calculate it is opening balance for the 2012 year. Okay, 1,20,000 minus this depreciation amount. How much is the amount? 96,000 are there, right? For all the 3 tempos, the value is 96,000. But the company is going to take 2 machines, 2 tempos they are going to take with them. Okay. So 96,000 into 2 by 3 because of 3 tempos are there. So that multiply by 2 and divide by 3. You will get how much? 64,000, right? 64,000. Okay. So then you subtract 64,000 minus 49,000. Why? Because of the amount which was calculated by us, right? They are going to take that tempos with them. The value is 49,000. So the profit and loss account, they are going to transfer. The value is 64,000 for the two machines. They are going to take the value of 49,000. So you can write here 96,000 into 2 by 3 is equal to 64,000 minus 49,000. How much is the amount? 15,000. You can write by profit and loss account 15,000. Then the value of one tempo left. We should calculate the value of one tempo with this. Okay. We can calculate the value I have given on working notes. You put on heading value of a tempo left with the buyer. How much is the cost of one tempo? 50,000, right? That 50,000, we should calculate the depreciation 20%. So when you are calculating 20%, you will get the depreciation value is 10,000, right? You can write here 10,000. Just to subtract 50,000 minus 10,000. This is for the first year. For the second year also, we should calculate the depreciation under diminishing balance method. 40,000 minus 10,000. That is 50,000 minus 10,000 equal to 40,000, right? So 40,000 into 20 by 100, 8,000. 8,000. 8,000. So first year 10,000, second year 8,000. Total how much? 18,000, right? So 50,000 minus 18,000. Just to subtract it. How much is the value for the tempo left with the buyer? 32,000. That amount you can write here. Okay. By balance CD. This is the closing value of that particular tempo. In the bracket, you should write here value of one tempo left. Value of one tempo left. Okay. So then just you brought down that balance. How much is the balance? In the year 2013, January 1st, to balance BD. To balance BD, 32,000. To balance BD, 32,000. Just you come to this credit side. 2013, December 31st. We should calculate the depreciation, right? So you can write here by depreciation. By depreciation. Okay, 32,000 into 20 by 100. 32,000 into 20 by 100. How much is the depreciation value? 6,400, right? You can write here 6,400. Then just you find out the balance. 32,000 minus 6,400. 25,600. You can write here by balance BD. By balance BD. 25,600. You can carry down that amount for the next year, 2014, January 1st, to balance BD, 25,600. Then we can see Delhi Motors account. Delhi Motors account. Okay. Date column, then particulars column, then amount column. In the credit side also, date column, particulars column, amount column. You come to the debit side, 2011, January 1st. In the particulars column, you have to write it to bank down payment. When they made an agreement, they have given 30,000, isn't it? Payment was to be made 30,000 down, and remainder in 3 equal annual installment. So you can write here. You can write here in the Delhi Motors account. You can write in the date column, In the date column, you should write 2011 January 1. The particulars column, to bank. In the bracket, you have to write it down payment. The amount column, how much is the amount? 30,000, right? So you can write there 30,000. Next, you come to this credit side, by Tempo's account. How much is the cost of all three tempos? 1,50,000, right? 50,000 into 3. 50,000 in the credit side, you can write 1,50,000. The debit side, we are writing to bank down payment 30,000. Then you come to this interest part. They have mentioned in the question, they are charging 9% interest, right? So listen here, 9% interest. When we have made an agreement, they paid rupees 30,000. Okay. So we should calculate the interest 1,50,000 minus 30,000. 1,50,000 minus 30,000. How much is the amount? 1,20,000. For this 1,20,000 only, we should calculate the interest. So you can write here 1,20,000 into 9 by 100. 1,20,000 into 9 by 100. The amount column, you should write it 10,800. When you are calculating 9% interest, you will get 10,800. Next, you come to this next part. Okay. What is the next part? After paying this amount, they are paying that amount. In this agreement, they should pay the balance amount in 3 equal installments. Don't forget it. 3 equal installments plus interest. Okay. 1,20,000 amount is there, right? The balance amount, total amount 1,50,000 minus 30,000 is equal to 1,20,000 divided by 3. Okay. Divided by 3, how much? 40,000. But here, how much is the interest? 10,800. Can you understand? We are paying that amount in 3 equal installments. Balance amount is 1,20,000 divided by 3. That is 40,000 plus interest we should pay. Okay. So we can write here December 31st. December 31st. To bank. 50,500. We can write here 50,800. Just you put the total. 1,60,800 is the total. 1,60,800, right? So just you subtract that amount. 1,60,800 minus 30,000 minus 50,800. You will get the balance 80,000. How much is the balance? 80,000. So you can write here to balance CD. To balance CD 80,000. To balance CD 80,000. Just you brought down that value 2012 January 1 by balance BD. By balance BD, the same value we are going to brought down here by balance BD 80,000. Okay, so then we should calculate interest rate, right? Interest 80,000 into 9 by 100. From this value, we should calculate the interest. So 80,000 into 9 by 100. We will get 7,200. 7,200. Okay. So then in the debit side, 2012 January 1, 2012, January 1. The particular company is going to take the tempos, right? Two tempos. So you can write here the debit side, two tempo, two tempo. How much is the value? We have calculated. Already we have calculated here. See how much is the value? 49,000, right? This value, 49,000. So you can write here two tempo, 49,000. Then just you total it in the credit side, 87,200. You should write that amount in the debit side also, 87,200. 87,200 minus 49,000. The balance is 38,200. On December 31st, you should write to balance CD. To balance CD. 38,200. 38,200. This is the balance amount. You can brought on this amount for the next year. Okay. You can write here by balance BD. In the year column, you can write 2013 January 1, 2013 January 1 by balance BD 38,200. 38,200. I hope you got very good clarification and thorough knowledge about this installment system. Thank you.